Hi, everyone. This is Dr. Tonya. I'm the host of the Mucho Dinero TV show. And you know what? While I'm playing the commercials, while we're getting everything together, go get your family, get your friends, even invite some of your enemies. Yes, your enemies, because we're supposed to bless our enemies too, right? Get some people, tell them that they need to hear. They need to hear what we're getting ready to talk about. We're going to talk about how to create wealth. That's right. How to secure your own bag, how to get money. So go get your friends and come on back. All right.
Hello, I hope today finds you well. My name is Nova Speaks, and I wrote this poem specific for this conference of wonderful ladies. It is titled, Secure Your Own Bag. I hope you all enjoy. Hey you, standing there, unsure where to turn, counting change and lost dreams held in the pockets of your jeans, wondering if the hole your finger pokes through is where your hopes went. The attempts made in past brought forth a spirit spent. How do you move forward from this life that's not quite meant for you into the one that's been calling where your dreams can come true? It takes just one step and the courage to choose, to barter the something old for something fresh and new. Each dream a blueprint of exactly what you need. As you glance at the things that once gave you doubt, your mistakes are just the thing to show you where to begin. And so you decide with resolve to try and try again. As you set your plan of action to build a secure foundation of your own, here are ones who walked before you. In your place they have been. Their words of wisdom will ground you, these women that have tried and tried again. As you come to your decision, naysayers must wave their white flag. You shall find success and peace as you secure your own bag.
Hi, everyone. Once again, this is Dr. Tanya. I'm the host of the Mucho Dinero show, and I have a very special guest on here today. She is not only my friend, she is a financial literacy expert. Yes, she is. She teaches financial education. She has her own podcast. She's a licensed insurance agent. And you know what? I was going to call her and have a private conversation, but I was like, Tanya, don't be selfish. Go ahead, share Vivian with the world. And I said, okay. So, Vivian, here you come. Welcome, my sister.
Thank you so much, Dr. T. It's such a blessing to be with you again. It's always a pleasure to hear your voice, and I'm grateful that you decided to have me on today to share some valuable information that a lot of people need to know, not just yourself. So I'm thankful that you saw that we can get this information out to a lot of people just by being on your podcast. So I just want to say thank you for that, Tanya. Appreciate you.
Thank you so much, so much. So, tell me, we're both Southerners. I'm from Walterboro, South Carolina, and which is about, I think, an hour and a half or so from you. And
Right.
you're from the South also. So, we have that in common. You know, we're grandmothers. We have that in common. We're married to some awesome men. We have that in common. But you know what else we really have in common? We really, really, really love helping people.
Yes.
We'll do it, no matter what, we'll do that. So if you are listening to me and Vivian right now, do not be selfish. Go ahead, share this out. Let your children hear this conversation. I already told all three of my children, my grown children, I want them to listen to this broadcast today, and I expect them to listen. I expect them to comment because they know how I am. I'm not playing when it comes down to my great grandchildren and money and what have you. So share it out and thank you so much. Oh, okay, we just did the poem. I'll tell Nova that she did. That poem was nice, wasn't it, Vivian?
Yes, it was beautiful. Yes, I
Was,
was very
yeah.
in tune to the poem. I was like, wow, that was great.
Yeah, she is an awesome. She's an editor and she also writes poetry. Her name is Nova Speaks. But Vivian, I'm gonna just ask you a few questions. Is that okay?
That'd be fine. That'd be fine.
Okay,
That's why I'm
okay.
here. So we can educate people, and so whatever questions you have, Dr. T, go ahead and let's go.
Okay, awesome. I want to know, why did you decide to sell life insurance? I know the story, but I wanted you to share that.
Well, it's personal for me, Dr. T. As you said, we're around the same age, and growing up, life insurance was something that was not talked in the household. It really wasn't a big topic. Just like money wasn't a big topic in the household, but life insurance really touched me when my mom became sick and when she passed away. And for me, it's very touching because I was her caretaker. And being in my late 30s, I was not thinking about life insurance at all. It was not even, like I said, a conversation in the household growing up. So when she passed away, she didn't have life insurance. So for me, I was like, wow, I didn't even think about it. I was a different place at the time in my life, and this wasn't something that we thought about. So that's why I got involved with this industry, because it's personal for me. And as I get older, I start to think about myself and my children and my grandchildren and my great grandchildren. It's like, what type of legacy that I want to leave for my children and my great grandchildren. So my mom passed away. We had to get together and pay for her burial. My siblings and I, we had to come together with money to make sure she had a decent burial. And I said to myself, I would not let that happen to me, and most importantly, not let it happen to my children, where they have to be at a place in their life where they have to take care of me, because I couldn't take care of myself. So I started this journey on eating right, exercising, being more conscious of just my life in general. So that's why I got into the industry, because of her. I'm very grateful for my mom, and we always say, we want to do better than our parents did, but she did what she could and, what she knew to do at that particular time. So now I'm in a different place now. I know more. I'm more educated on the things that I want in life and how it's so important, not just for life insurance, but financial literacy in general when it comes to money. So that's why I choose this awesome industry.
That's awesome. That's great. And the thing about it is that we can make a choice to prepare, because like, I think funerals can be $15,000-$20,000 now.
Right.
It's really gone up, over the years. So even if you didn't do anything but just have, I don't know, a policy for $25,000 or $50,000, I think that would help greatly when it comes down to the burial expenses, and then not waiting to do it, because unfortunately, I don't know about you, Vivian, but I've had quite a few people that have passed away before 50 in my family as of late. It was due to COVID, and some of it was because of diseases, and we weren't expecting any of that. So no matter how old you are, it's never too late. No matter how old you are, if you need life insurance, if you look at the bottom, we're scrolling a banner, and the banner tells you exactly how you could get in contact with Vivian, and she could get you started on a life insurance. And if she can't get you started, Vivian, I know other people in other states that can.
Right.
So
you said something very critical there, Dr. T. When we talk about age, a lot of young people think that they don't need it. But unfortunately, a lot of young people are dying just as much as older people. And when you talk about life insurance, people think, number one, I'm too young, I don't need it. But there's one thing for sure and two for certain: we all going to die.
that's
We
right.
just don't know when. So it's better to be prepared to have something than not be prepared and don't have anything. And then, it's not just for the burial part. I think a lot of people get the misconception that, well, I don't have to worry about it. I won't be here. Let somebody else deal with that. But what about, the husband or wife or children that are left behind? They still have to live once that person, dies. So it's just not necessarily about the death of that person, but what are you going to take? How are you going to take care of the family that's left behind? So I tell people, if your people, your loved ones are important to you, then you can pretty much have something for them also. Okay. We have a question here. Tanya says,
Yes.
explain how life insurance can be used in other ways outside of its death benefit.
We are gonna talk about that. We're going to talk about that. But before we answer that question, thank you for the questions. I asked everybody to put them in the comments, and thank you for doing that. So keep the questions coming. But before you go on, can you tell us about the different types of life insurance policies before we get into that portion?
Well, and that's why I love this industry, Tanya, because there's no such thing as one product fits everyone. Okay, there's different products for different people based on their situations. The first is the simplest one is a term product, meaning that you're only using it for a particular amount of time, 10 years, 20, 30-year term. And just like renting a house, you're renting that house for a particular amount of time. Once the rental agreement is over with, so is the contract. So the same thing applies to a term product. Now, we also have what they call term ROP, return on premium, meaning let's say there's usually for a 30-year period only. So if someone gets a 30-year return on premium term policy, if they don't die within that 30-year period, they will get all the premiums they paid back into that policy. Now, normally young people benefit, a young family can benefit from a term policy. Like you just bought a house, usually most mortgages are 30 years, right? So a person can get a 30-year term policy and use that death benefit if something happens to one of the main breadwinners. A husband or wife passes away. Now you have $200,000, $500,000 that's in a term policy. It's going to cover mortgage for that spouse. So that's your term policies. Then you have a whole life policies or permanent policies, and you have a whole range of permanent policies stemming from index universal life policies. You have universal life policies. So, and these are policies that grows cash value, where not only do you have a death benefit of the face amount, but you also have money that's growing and accumulating in that policy that you can use at any time whenever you need it. Okay. So we tell people get what you need based on your current circumstances, because everybody is different. Everybody, you just need maybe a death benefit. Maybe you have insurance and you just want something on the side so your family can have, let's say, $25,000 just for burial. And then everything else that you have that's going to take care of the children's education. It can take care of the mortgage. It can take care of any debt that's left behind by the deceased spouse. So there's a lot of reasons that people use life insurance. It's not just for death. So when you talk about those different products, the person needs to decide, first of all, what is the purpose for it? You all know, okay, life insurance when you die, but not necessarily. And to get to that question that was asked, we also have what they call living benefits. The term life, and when I first got into this industry, I'm like, okay, it says life, okay? Like life, the benefit of your life. It's like our cell phone. We have insurance on our cell phone. If something happens to our cell phone, you can go and get a new one because you're paying $20 a month extra for the damage of that cell phone. The same thing applies to life insurance when it talks about living benefits. So what happens if you get sick with a heart attack, stroke, or cancer, which is normal, unfortunately, for our society, people have these illnesses and sicknesses, you can pull money from your insurance contract to help you pay for your medical expenses, to help you, pay for your debt, help you pay for your mortgages while you're still living. So it's just not about the death benefit of life insurance, but you want to be able to use those benefits while you're living. So right now, the industry itself has, changed dramatically when it comes to the benefits of having life insurance. So it's not just about the death, but it's also about the living also. So people can take advantage of having a policy that's going to take care of them when they're still living. So you see more value in it and just not, when you're dead. Okay.
Okay, so my question for you is, the question was, can you explain how life insurance can be used in other ways outside of death benefit?
Right.
So what I'm hearing is that you can use it as living benefits.
Right.
That's
You can
one
use
way.
it. That's one way to use it. If you're still living and someone gets sick, you get sick, the policy holder gets sick, and it could be any sickness. It could be critical, chronic, or terminal illness. Depending on what it is, the insurance company will tell you what percentage of that death benefit that you can pull out, then you still have money for the burial. Okay, so this percentage is based on what the sickness or illness is, determines on what type of policy it is, but you can pull money from it. Let's say you have a $250,000 in IUL and someone gets sick. Let's say cancer, which can be terminal, but necessarily don't have to be terminal. But if you get cancer, then the insurance company can write you a check, to take care of your expenses while you're still living and still have that death benefit intact. Now, yes, it will decrease the death benefit, the face amount of that policy, but just imagine you still have money that you can have while you're still living and live off of it. And the good thing about that, Dr. D, insurance will tell you what you need to spend it on. If you want to go take a vacation with your $50,000, if you want to do that, you can. There's no stipulation on how you spend the money, but it gives you the opportunity to still live while you're going through your sickness or illness. And so that's one good thing I love about our products that we offer. All the products that I offer, they have living benefits, including our term products have living benefits. So you can have a term product and have living benefits also that's built into the policy where you don't pay any additional cost. Okay.
You've answered those questions quite well. You told us how we can use an insurance policy to create wealth or to build wealth, and you've also shown us how we could probably use that also as retirement income in the future. Am I correct by saying that? You answered those questions. So now this is the reason why I called you, and I was going to have a private conversation with you. It's because of that word, and Cantrell, welcome Cantrella. She said, okay, she's learning.
Okay.
But the reason why I called you is because of this.
Okay.
What does IUL stand for? What does that mean?
It stands for Index Universal Life. Okay. And that type of policy, not only is it a death benefit, but it actually grows tremendously over a long period of time. Where what happens, your money is put in what they call using S&P 500, which is not the stock market, but it's compatible to the stock market, where that money is growing at a higher interest rate, unlike the bank. As we know, most of our banks, you're not even getting a 1%, rate of return on your money. But with an IUL, you can get up to, let's say, 6 or 7% on your money, where it's growing over a period of time. So that money that's growing in IUL, it can be used for generational wealth. People can take that money, and the more you put in, the more, as far as it has a flexible premium, meaning that you can have a IUL, let's say $500 a month you put into that policy. You can put all the way up to $1,500 a month in that policy. It all depends on the fluctuation. That's one reason why a lot of people are getting into those type of policies, Dr. T, because of the flexibility, and that the money, it grows at a higher rate, unlike your bank account or savings account. And the one good thing about it is not affected by the stock market. So if the stock market go up, go down, go sideways, it really doesn't matter about your policy. You're still going to maintain that safety and security with that IUL. So a lot of people are understanding that. And once again, it has living benefits too. So people can structure policies with two policies. They have a term policy for 500,000, and that's going to take care of the house and take care of the debt that's left behind by the deceased spouse. Or now you have an IUL that's going to take care of the children's education. That's going to take care of starting that generational wealth building on that side. So there's all different type of ways that policy can be structured to build wealth. And you also have to be mindful that all this money is tax free.
Yes. And IUL, that's a benefit. That's why I wanted to have that conversation with
Yes, it's
you.
a benefit. And then there's certain criteria by taxes, tax wise, that we have to be careful with when it comes to the IRS, because a life insurance contract has to maintain that criteria when it comes to 7702, which is a tax code. As long as it's within that tax code, you won't be taxed. There's no benefit, no life insurance contract benefit that's going to be taxable if it's structured the right way. Okay.
Thank you. You know what? And that's another thing. We have another question. But before we go to their question, I have a question. Let's say this is hypothetical. Let's say that I have been putting $1,000 in an account for 15 years.
Mm.
Okay. But then at the 10th year, I decide that I want to buy a property and I want to put a trailer on it and rent the trailer out as an investment property. Could I pull some of that money from the IUL and do that?
Yes, you can. And like you have to understand too that this is long term. So I tell people, if you're planning on getting an IUL product, make sure that you want to invest the time into the product, because the more you put in, the more value it's going to grow. And you don't want to get it to, 2 years and you expect to have all this money. It's not going to happen. It's not like you're going to put $1,000 for 2 years and now you can take out 100,000. It's not going to happen. It's a long-term product that's going to help build wealth. So people have to be in the right mindset to know that this is long-term. So once you're able to pull that money out, then yes, as long as you wouldn't keep it in there and let it grow for you. And
What's
there's
the
no
average? Is it a 15-year type situation? You have to
No,
normally wait?
usually you don't start seeing the cash value in a normal IUL at least to the 3 to 5 years. You're gonna start seeing
Oh,
value, but the more you put in, the quicker the money will grow. Also,
okay. That's
so
what I needed to hear.
you
That's
can't expect
exactly
to put $100 a month and then now you got
okay.
to pull out this money. Really have to have the money there. We have some high clients that may put in $250,000 in IUL. But then there's another issue you got to worry about. You make sure that it does not go into a modified endowment, meaning that if you're putting too much money into the product, then the IRS says this is not life insurance. So you have to be mindful that it does not go over what they call the MEC period. So you have to be mindful about that. You only put so much money into the policy every year before it's not an insurance policy. And then the IRS says, okay, we're going to tax you.
Well then, yeah. So, but you know what? It would be nice to have richer people problems
Oh,
because I'm
yeah.
telling you that. I mean, to be able to put 250K in something like an IUL, I would be happy to have
Right.
that
Right.
situation. So before we go on, I'd like to clarify something that
Okay.
we had talked about earlier. And we got about another 5 or 10 minutes before we end the broadcast. But if a young person, let's say they're 23 years old, this is really their first real job. They're only making, I don't know, $45,000-$50,000 a year. They're not making a whole lot of money at this particular time, but they could benefit from getting a type of tool or a type of policy that they could put in for 30 years. They could pay in it for 30 years, have cash value, and be able to use that money for certain things within that time. And then you had said something about if they pass away or something before. Please explain that again. So if they
Okay.
expire before then, but they still be, how does that work?
Oh, you talk about the term policies, because whole life and
Oh yeah,
permanent policies
term.
don't
Yeah,
expire.
term.
Right.
Yeah, term
So
policy.
you
Yeah.
have a regular term policy that it will expire after a certain period of time. Normally, 10-year term, 15, 20, or 30-year terms, they expire. But the good thing about those policies, Dr. T, is that you can convert them, you can upgrade them to a whole life policy before it expires. The only difference is that you will be paid, you'll have a higher premium because now you're older. So,
Yes.
but you can still have that policy in place and upgrade it to a whole life policy, an IUL policy, and still have it, for that period of time. So it does expire, but then you have the ROP, and usually return on premiums. What that means is usually for 30 years. So let's say, like you said, a 23-year-old male, good health, gets the policy, 30-year term policy. Let's say $300,000 when they're 23, and now they're 53 and they're still alive. So all the premiums that person paid into that policy, the insurance company will give it back to them. because it expired, but they did not die. So they're only going to get their premiums that were paid in over that 30-year period of time. So let's say if it's $20,000, so that's $50,000 for 30 years. So you'll get that money back.
Do you know if you get interest? Do you get interest?
No
I know
interest.
no interest.
You won't get back what you paid into it, because now, but that's a good thing, because now just imagine if like renting a house, right? If you're renting a house, you don't get back the interest, you get back but you not even what you paid into it, you get your security deposit back.
Yes. Yeah, that's it.
But when you buy a house, now you have some equity in the house. So if you decide to sell a house or you refinance the house, now you have some money into the house. So that's the difference between the term and the whole life. So that's how I use those two when it comes to renting and having a mortgage. So it kind of relates to each other.
So the question is, what is a person to do if they're about to turn 85 and their life insurance expires? So
okay, so if their life insurance is going to expire, then it must have had a term policy, because most insurance policies go up to 121 years old. So if the person has a life insurance policy and it's going to expire, it's most likely it was a term policy. And if they want to upgrade it to a whole life policy, they need to do it soon, because at 85 is unlikely you're going to get a policy at that time. And it's going to be very expensive, because as you know, even if it's a term policy, you're going to be rated at your current age, not your previous age that you were when you first got the policy.
And you know, that's important too.
Yeah. Most insurance companies don't insure you after 85.
And that's so important, because in my family, we've had so many people that have lived to be over 100 years old.
Right.
So, you know, so being able to be in, I didn't know that I could be in a policy, pay it for a certain amount of time, and then get back the money that I put in it.
Yeah.
So term is not bad then. Term
is
not bad. Yes.
Term is not bad at all. And like I said, it depends on where you are economically. You know, you want to, get in something. It's better to have something than have nothing at all. So if you can get a $100,000 term policy, especially a young person, let's say $30, $40.
I think we are having a little technically difficulties on Vivian's end. So I'm going to give her a little few minutes to come back. I'm hoping that you all are enjoying this broadcast. I'm learning and I'm having a ball. Let's see. I'm learning and I'm having a ball. I'm going to give her a little bit of time to come back in. And while I'm doing that, I want to give a shout out to Life Magical Journey to Life. That's her name. And she has a YouTube channel that's called Life's Magical Journey. So if you can, do me a favor, go ahead and go to her YouTube, subscribe, comment, like what she's doing. I got to give her so much respect, because it's because of her that I was able to start my YouTube channel. So thank you so much for watching, Life. I love you so much, and keep it going. You are definitely one of my sheroes. So what we're going to do is we're going to do a little commercial break, and we're going to wait for Vivian to come back and finish up. And I hope you all are enjoying this broadcast today, because I am learning. I wanted to make sure that that I didn't only get the information and didn't share it with other people. Thank you to everybody that's actually listening today. And remember, if you have any kind of questions, be sure to ask questions. Put the questions in the comments. I'll find them and I'll ask Vivian to answer it for you. And remember, Vivian's information is at the bottom, where you could actually go ahead and book a free consultation with her. So she has a presentation to do. So it's not too late. Go ahead, grab your friends. Go ahead and grab your children. If they're 21 or above, they really need to sit down and talk about this, because tomorrow is not promised to anyone. And no matter what we do, we have to make sure that we live our life according to wisdom. So here's a couple of little of some commercials, not little, but big commercials to me. I am on the Swing Girl Media Network, and listen up. This is with Precious. All right. Okay. All right. I'm talking to Vivian right now. We're going to be waiting on you. We have some people waiting on you, and we getting these questions together. So I'll see you in a second. All right. Hi, everyone. This is Dr. Tonya again. And you know what? We just take a little break so we could go ahead and play some of these commercials. So guess what, you guys? On November 17th, I am having a free vision board party. And on the free vision board party, all you got to do is sign up. If you're here in Las Vegas, then it's going to be an in-person event, but we're also going to make it virtual. So if you have not signed up for that, stay tuned because I'm going to show you how to sign up for that. But it is my vision board party. I do it every year. Hey! You're back. That's good. That's good.
I'm back. Sorry for that brief interruption.
That's okay. There's
Sorry
no
about that.
problems at all. You know, we kept it going. We played some commercials. You know, I'm on the Swing Girl Media Network on Roku, on all
Right.
those different platforms. So I played Precious's commercial. I also played my commercial. So, and we talked a little bit about how, you know, everybody is learning, is enjoying the broadcast. So, are you ready to go ahead and if you want
let me hold on 1 second. Let me get
okay.
Vivian.
All right. Well, today we're learning about IULs. And what I've learned so far, you know, is that IULs, it's really good because I can put a little bit of money in there and wait some years down the road and actually be able to get something from it. Another thing that I learned today is that that you could do a term policy and then pay it out, and then you'd be able to get all the money you put in for it. I had no idea that you could actually do that. So Vivian, I'm telling you, Vivian, you know what? You're really teaching us today. I had no idea, you know, that you could do
that's what
that.
I love doing. I love educating people, you know, because like I said, I was uneducated. You know, like I said at the beginning of the podcast, I had no idea. I wasn't even thinking about it. I wasn't even conscious of it, even though I knew we're all going to die one day. Having life insurance was not the top thing on my list. So I love educating people because you know, today in 2022, I don't think anybody should be uneducated when it comes to, you know, financial literacy. They don't teach us this stuff in high school. They don't teach this
No,
stuff to us in college.
no,
So I just love educating. Because I want somebody to get something that I did not know. So if I
that's
can
right.
help anybody, you know, understand it better and get a better understanding of how these products and services work, you know, then I know I've done my job. Regardless if, you know, I don't get paid for it, I want to educate people because I believe that the mission is more better than the commission. You know,
That's
my
right.
mission has been fulfilled. And I know that God is going to continue to bless me by educating people in what, you know, I did not know. So I just love it. I just want to say thank you again.
Thank you for coming here. Now,
Yeah.
another question I have to ask you is there a minimum amount of money that I have to have in order to be able to benefit from participating in the IUL? Is there like a smallest amount?
There's no minimum. What I normally do, I do what they call a dime system. If people ask, well, how much money do I need to have in order to start a policy? Well, you want to consider, you know, everybody's different. So when I say dime, the dime consists of how much debt do you have? You know, as a
Okay.
couple or a single person, how much debt do you have? Okay, that's what the D stands for. Then you have the I. The I stands for income. How much income will be lost if you're no longer here? Okay, then you have your M. Your M stands for the mortgage. You know, how much is the mortgage will be left on your house if you're no longer here? And then the E would be for education. You know, if you have small children, you know, you want your children to go to college or go to trade school or whatever it is, you take that amount per child and you say, okay, $100,000 for each child. And you add up those numbers, and that will give you an idea of how much insurance that you need, your insurable interest, your insurable need, because everybody is different. So, and then we can say, okay, well, you need, let's say, $850,000 of coverage. That's going to cover the income that was lost. It's going to take care of the mortgage. It's going to take care of sending 2 kids to college, and it's going to take care of your debt. And then from there, we back engineer to see how much that will cost, and also and we get you in a policy that's going to be reasonable for you, because like I said, everybody is different. So once you find out what your insurable need is, then we can put you in a product or combine products together to help you come with a reasonable monthly amount that a family can reasonably afford, because it's all about affordability. Being in this industry now, Tanya, for 2 years, the one thing that I've learned is that for some reason, people pay for what they want. They don't pay for what they need. They pay for what they want. So if a person know that they need life insurance and it's in within their budget, they're going to continue to pay for it. But if they don't feel that they need it, it's going to be the first thing to go when it could get into a crunch. Let's say I gotta pay the car note or pay a light bill or buy grocery. Okay, well, I can't pay life insurance this month, and now the policy is going to lapse. So I make sure that I put people in a reasonable amount that they can reasonably afford, and that they know that they need it, not just want it.
You know what? And you and I were talking about this earlier off camera. We were talking about the fact that if you are at a certain age limit, or if you're a military person, or if you're a person that gets Social Security, everybody's getting an 8.7% raise, you know? And for some people, that might be a $300, situation, or $100 situation. But
Right.
quite a few people are getting that. And to be honest with you, I'm what I plan on doing with my raise, because I am military and my husband's
Right.
military, is we're going to take that money and we're going to invest it in an IUL. And I'm telling you, I don't want to do it because I see them shoes I want. I want to go on this vacation. You know what I mean? It's all about this satisfying flesh,
Right.
But I realize, you can't miss what you've never gotten. So if I didn't
Exactly.
get the money, I'm living on it without having that raise right now. So guess
Right.
what? So I love my grands more. I love my grands more than I love the shoes and the trips and what have you. So my husband and I, we're in a place right now where we said, okay, we're just going to take the money. We're going to just do an IUL. We're going to let it sit, and we're just going to see what happens, and we're just going to see what happens. It's simple
And
as
that's
that.
all you can do, and one thing too, I know you said you want to do the IUL to help the grandchildren, but there may be people out there that may don't have any grandchildren yet. Maybe they're looking at retirement. Okay. Because we all know that Social Security is not going to be enough to take care of anyone once they retire from a job. Some people don't even have pensions. Most people have 401ks, 457Bs, and 203Bs, which we all know those are just tax codes. They all do the same thing. Just depends on what your particular job is, depending on give you that tax code. So you can actually take an IUL and grow it over a long period of time, and also turn it into retirement income.
Oh, wow.
So
You know how to do that?
yes, you can
Okay,
take money. You can take money. So it's like having your own pension. You can turn that the distribution phase on, because you're an IUL, it comes with an accumulation phase. That's where you're putting money into it. You're growing. It's like your 401k. You put money into it every month. It's growing, it's growing. And then when you get to a certain age, let's say 70 or 65, you want to retire, you can turn on the distribution phase, where you start getting a monthly check from the money that you put into that policy over that long period of time. So I also teach young people about that, because most jobs don't have pensions, and we all know, unfortunately, the 401ks and all those things is tied to the stock market. So depending on what the stock market is doing, you can lose money.
Yes.
And you can gain money, you can lose money, depends on what the stock market is doing. But with an IUL, and also index annuities, we didn't talk about that, which is another form of product that we offer, is index annuities, which is another way that people can generate retirement. And I usually help my self-employed and entrepreneur people with those products, because they don't have retirement. They don't have a retirement set of place. So instead of putting your money into a bank, or putting in a mutual fund or something like that, you can put in an index annuity where it's not attached to the stock market, and you can go over a long period of time. And you can also, once again, it's the death benefit that's built into it. And also you can turn it into lifetime income to help you with your retirement after you can finish with your, your business or your job.
That's
So
important
a lot of information.
that's important because as an entrepreneur, like you said, we really do have to think about, who else that would be important for? That would be important for pastors, for minister
Yes.
leaders who work in the
Yes.
ministry that don't have all of that, being able to do something like that. And, so you guys, if I were you all, I would go ahead and schedule an appointment with Vivian. I know I am. So Vivian, yes, we are ready
Yes.
to sit down
Yes.
and have a
Okay.
conversation. My husband and I, we
Okay.
really are. So I'm ready to go ahead and get started, but I didn't want to do it by myself. That's why we're doing this. I want
Right.
people that are in their 20s and 30s. Life earlier, she said, I'm guilty of that. I mostly pay for what I want, and that has to change. Guess what, life? It has to change with me also,
Yeah.
And I was talking to, so don't feel bad. What we're going to do is we know better, so we're just going to do better from now on. Simple as that. And I'm going to start.
It's about doing better.
Yes.
Have all this information and do nothing about it. It's just a waste of people's time. So I know that, it was a lot of information. I'm learning, still learning. Even the more I talk about what I do, the more I want to share it. The industry is right now, Tonya, if I can just say, is lacking people like me to teach this stuff. Life insurance industry itself is usually white male dominated. Used to be anyway, but now a lot of people that look like you and I are in this industry, and it's a $63 trillion industry that need more people to get this information out, because my mission is to get rid of the GoFundMe for life insurance purposes. A lot of people, get on Facebook and put out these thing about, someone passed away, someone's sick, now we got to raise money. Why not have your own life insurance contract in place, so when someone dies or gets sick, you can have that money available? So I need help to do this, Tonya. I'm looking for people that want to join my team, and it doesn't matter what state you live in, because even though I'm in Georgia, I have 13 licenses in other different states, even Nevada.
Yes. Yes,
So
you
I
know.
can help everybody, no matter where I'm at. I can help people, and I'm just looking for more people that want to join this crusade, because to me, that's exactly what it is. It's a crusade to ensure the people that's out there that need it. And I know my community needs it the most, because we're not conscious of it, just like I wasn't conscious of it. So we need the more people we tell about this, the more that we can, just be more educated. It's so important. Financial literacy, so important.
With me, I have a new book. It's called 52 Ways to 1K.
Yes.
52 Ways to 1K. That's our new book. We have 8 authors on there, and all of us are talking about different ways in order for a person can set up a system in order to earn that $1,000. However, my goal for this year and beyond is to earn money while I sleep.
Yes.
So when I think of IUL, when I think of the start market, that's what I'm thinking of. That while I'm sleeping, I just place that resource there.
Yes.
And that's it. I place it there, and then I just wait, and then money comes in. So that's another profit. It's another profit stream for me, to be honest with you.
Yes.
So I've dipped and dab a little bit, but now I'm in this, and then I'm in this place where I'm learning more, and I just want to know more so I can employ more. Use wisdom with my finances, to be honest with you. Use more wisdom with my finances. And then, I need extra money to do my trips too. You know how much I love traveling. I absolutely love traveling.
About, you want to be able, especially when you're in your 50s, you want to be able to enjoy life. You don't have to worry about, what needs to be paid. Once you get your finances in order, that's what it starts. That's what so many people are struggling right now, because of lack of finances. People don't have money. People live in paycheck to paycheck because they did not learn about financial literacy. Like I said, they didn't teach us this. I know for me personally, I learned by making mistakes. Like buy here, pay here, and renter center, and all the other stuff that we do. So it was a learning experience for me. So like I said, I'm on a mission to help somebody not make the same mistakes, that I've made. Like we all want to do, being mothers and grandmothers, want to try to, protect our children from doing things that we did. And, so that's why I do what I do, Tonya. So I'm just happy.
I'm so happy. Yeah. I'm happy that you're doing it too, because even this broadcast, I'm learning so much. So listen here. If this has been a blessing to you, share this out and go ahead and schedule a free consultation with Vivian. I'm gonna do it. It's just time, and I need to do it before the money comes. So January we're gonna get the money. So I need to make sure that I have everything done so that I won't be receiving the funds and be tempted to start spending it, to be honest with you. Because I'm not a big shopper, but I love traveling. So all I care about is travel. To be honest with you, I'm a big traveler. I dream about traveling. I just absolutely love two things. I love showing people how to make money, how to earn money, and I love traveling. Those are two things I love. And then beyond anything, I love my 4 beautiful grands. I would do anything for those grands. But what I'm going to do now is we're coming to a close, but you have some numbers for us. So what I'm going to do is I'm going to back out, and then I'm going to go ahead and let you present, if that's okay with you. You could go ahead and you could present the numbers. Thank you so much for sharing. So let's see. I'll back out and I will have you present your numbers. So everybody that's listening, now is the time for you to go ahead and invite your friends to see, because I'm telling you, numbers talk. Thank you, Vivian.
All righty. Let me. So, can I share my screen, Tonya? What we got going on here? Let me see.
Yeah, you can share. All you have to do is present.
Okay.
And we're going to give you time. We're not in a rush. There's no rushing in this at all. We can take our time. Because to me, this is so vital to be able to show people the numbers.
Okay.
Yeah, we're not in a rush. I don't have anybody coming back after you. You're the only interview for today. And this has been so rich, learning about how I could take really $50, or how, learning about the fact that I could do term life policy and get my money back when it expires.
Exactly.
All of that means a lot to me, Anytime I'm able to get up and be able to earn something, especially if I don't have to work for it. And investments is one of those things.
Makes me a lot. What I'm gonna do, Tonya, I'm going to let's see what this thing is. You said I can share. Where you see share?
Okay, what it says at the bottom, it says present. If you select that.
Oh, okay, there it is. Present. Then it says slides, video, share screen.
Yep. Okay. And I'm going to back out so that we have time. Everybody that listens to us, our followers, they're patient, they're kind, they're loving.
Okay.
So
you want me to do something just minimum, like maybe $50, $100 a month, or you want me to go larger?
I would do 50, because 50 is something that you could do and you could still pay your bills. Exactly. So maybe $50, something real small. Because here's the thing, it does not matter how much it is. What matters is that we do something.
Exactly.
That we start somewhere. So $50, because someone that's in high school that's working at a job, at Burger King or what have you, could probably afford the $50.
Exactly.
So I'm excited about seeing these numbers.
Okay, hope I'm doing this right. Okay, here.
Thank you so much for sharing.
Do you see this?
No, I don't see anything yet. Oh, I do see it. Yes, I do.
Okay, so I'm going to change. Let's say I'm this person, 25-year-old female. Okay, non-smoker. And
what I'm going to do is I'm going to back out so to just be you and your presentation. Okay.
Okay. I'm just going to put a date on here. Let me see. Okay, 23-year-old. You see it now, Tonya? Okay, so we have a Jane Doe 23-year-old.
It's very good.
You see that?
Can see it. You're doing a great job.
Okay. Then we're gonna do a increasing term, and what that means is that the value of the product, face value, the cash value goes up. and $50 per month. And as you see, these riders are built into the policy. When I talked about living benefits, the ABR, terminal illnesses, chronic illness, critical illness, even critical injuries are built into the policy where you're not paying any additional amount. And let's say this young lady, wants to add her children onto her policies. You can get a children's term policy, and that's starting at $5,000. Say $10,000 for the child. I'll say no. It's not letting me do that. And then we're going to do, so this person can get a $50,000 face value policy with $50 a month. And as you look at these numbers over here where it says accumulated value, this is how the policy is growing over a period of time. And as you see, where it says death benefit, this money is added to the death benefit. So as the person is continuing to put in $600 a year into this policy, it's continuing to grow. It's continuing to grow, and that's just $50 a month. And one good thing I like about these IULs, like I said, Tonya, you can add money into the policy as you go. It's flexible premium. So if people get their Social Security, tax benefits back, and they say, okay, well, I want to add more money into the policy because I got more money. Then I want to add some more money. You can add that in there. Just call the insurance company, and they can increase it based on what you want to put into that policy. So let's say $100 a month. So the more you put in, the quicker the policy can grow. And as you see, once again, this $100, $1,200 a year somebody's put into that policy, and they can start off with $84,000 face value. And as the person continues to grow, let's say by the time they get to, let's say, retirement age, 65, they have $138,000 cash value into that policy with a death benefit of $222,000. And that's just putting $100 a month over a long period of time. That's why I say it's important to realize that it's a long period of time IULs are used for. And let's just say, let me back out of here. I'm going to go to term. Just to show you. Let me get out of here. Here. And this is National Life. I'm contracted with a bunch of different agencies, and this is another National Life. Let's say Jane Doe again. I'm just going to put John Doe. How about John? Do a male. And believe it or not, males, they pay a little bit more than females do. At 45 years old. And monthly $100,000 here. Oh, you know what? I'm going to go back here to show you how those chronic illness, critical injury, and terminal illness are added into the policy automatically. It's something that you do not have to pay for extra. So even the term policies have living benefits at no additional cost. I love it. Okay. And as you see here, this person is paying a 10-year, $20 a month, $100,000, $20 a month for a 45-year-old male. 15 years, 26, 31, 20 years, 30, 89, 30 years, 45, $46 a month for $100,000. That's why the terms are still a good product, depending on what the person needs it for. Now you see this right here, annual return, renewable term. We don't recommend this type of premium because what it does, even though it's really inexpensive, $11, but it goes up as you get older. And if you can see, it's actually
excuse me, Vivian, we can't see that. We don't see, we only see the National Life group at the top. We don't see the numbers. I think you got to reshare it. or hit on it or what have you.
Wait a minute, let me see that. You see now?
No, it's just you and I again.
The thing says stop sharing. It didn't tell me to.
So if to stop sharing, you can go back and share it again. Like I said, we're not in a rush. It's good.
Oh.
We need to see that insurance does not cost.
I didn't stop. Let me present it again because I didn't stop sharing. It just.
This is so rich. This is so good.
You see it now?
Yes, I do.
Okay. So like I was saying, even with the term policy, it still has the living benefits that are built into it. So even with it has the chronic illness, critical injury, terminal illness. So you still have those living benefits that are built into a term policy. And that's why it's so critical and valuable to have maybe both. Because let's say you have a $500,000 term policy with living benefits, and you have your $250,000 IUL. Someone gets sick, you can take the living benefits from the term and leave the IUL where it is and still growing.
Okay.
And that does not affect the death benefit of the IUL, but it affects the death benefit of the term, which we know is just worth a term anyway. So if it expires, I mean, you're okay, but you can use those death benefits, those living benefits, instead of using the living benefits from your IUL. So it's all different type of ways that you can structure a person's contracts where it's going to be beneficial for that family.
Wow.
Okay.
And the thing about it is that if you don't really know how to buy life insurance, you would know what to, you would know what to do. You would know. Yeah, you would know what to do. So you could, so you got to be really careful with buying life insurance. You got to go to somebody that knows what they're doing.
And
that's what I'm trying
to say. You cannot. This industry is normally used to a kitchen table presentation. I mean, I'm quite sure you remember Tonya, because I know I do. The life insurance guy coming knocking on the door, say, "Hey, where's your parents? Can I speak to your parents about life insurance?" They come in, they sit down at the kitchen table, they give a presentation. Life insurance, this industry is used to face to face, sitting down and explaining people what they're getting. Not just picking up the phone and talking to someone on the other line and telling them what your age is and then giving you a quote. And normally that's what people have transitioned to listen to the TV and say, "Hey, I'm gonna give you $100,000 and you gotta pay $10 a month." Usually that's a lot. It's not. You're not going to get $100,000 for $10 a month from the television. You have to actually sit down and be educated, because that's what's most important: being educated how this industry works. I don't know if you guys saw this screen, Tonya. Now you say you didn't see my numbers when I explained them to you, but this was a 45-year-old male. This is a term policy, and that $100,000. The face about $100,000, paying monthly $20 a month, $21 a month for 10 years. And we normally would do this, like I said, depending on a young growing family, just bought a house or, just have their first child. So they don't have much income. So as you're young and you're growing and you're building and you're making money, you can have something small. And then as time increases and you start making more money, now you can upgrade this policy to a whole life product, an IUL, something of that nature once you get older. So even this person being 45, for 30 years, you're paying $46 a month for $100,000. And like you said, the return on premium, that person does not die within 30 years, they get all the money they paid into that policy. So there's awesome benefits to having a term policy.
Someone said, one of the Facebook users, I don't see their name, they said they need an IUL. If you need an IUL, then you know what? You don't need one anymore, because Vivian is here. Schedule an appointment with her, get that free consultation, and just make it happen. Vivian, I have one more request before we end the broadcast today. Would you please do it for $250 a month and use my age? I'm 52, proud, 52 years old, proud and young.
Proud and beautiful, right?
And let's see what $250 a month looks like for me for the IUL.
Okay,
and then we can end the broadcast. Okay. We were supposed to go 35 minutes, and look, but this is so good.
And when it's good, you want to get all the information that you possibly
Yes.
can. I mean, that's what it's all about. So you saying IUL,
Yes.
Universal Life here. Oh, wait a minute, I got to change your state. You're not in Georgia. You're in
No,
Nevada.
Nevada. I want to know what the numbers look like. You know, I'm a real numbers. I told you guys earlier today, I said, listen, Vivian is here for me, but I'm sharing her with y'all. You know?
Your date of birth will be 11
1969.
69.
That's right.
I'm a year older than you.
Oh, really?
I'll be 54 in January.
Girl, we look good. We look good.
Okay, so Tonya Blackman, female, 11/1969, 53 years, non-smoker, death benefits. And you just want to know how much increasing, how much you can get for $250 a month.
Yeah. Because I like those little things that has the 10, 15, 25, 30 years going across.
That was a term policy.
For the term policy. So this is going to be different. Okay.
Yeah, this is going to be a little bit different. And normally with this product, where is it at? I still see my screen, right?
Yeah, I can see it.
Making sure. Okay. And once again, I'll be clicking pretty fast.
That's okay. Everybody that's listening, if this has been awesome to you, please drop number 8s in the chat for me. The number 8, because that's the number of new beginning. That's my favorite number. The number of new beginning is a number 8. And you know, just make sure that you love on Vivian. Let her know, you know, drop what you learned. Maybe something new that you've learned on the replays. If you're watching the replay, we need to hear feedback, you know. So drop that also and let us know.
Okay, for 200, let me go back here.
And I need to stop thinking about insurance policies as being something that's for after I'm gone. My new mindset is I got to think about it as being a living benefit for today.
For today. For today.
Yes.
For $250 a month, it's 200. The base value starts at $286,000. That's the face value. And if you look at these numbers, Tonya, you can see you're 50, you'd be 54, 53. Tonya, you get 65. Your cash value is $12,000. That's what 13 years from now. That's in addition to this 200. As you see these numbers, the death benefit is going up. It goes up because the cash value that's accumulated in the policy is added to it. So once again, it continues to go, continue to move. And then here, this policy will have to be restructured before you turn 78, because what's happening here, they're taking money and they're what are they doing right here? Because it's going down as you get here. They're taking money from this and paying your policy. So that's why it has to be the more you put in, because what happens, the most insurance companies, they take some money, that the cash value, and they pay the policy for you. So the more you put in, the less they take from you. Believe it or not. Yeah. So you want to put more money into the policy. So believe it or not, people can become what they call self-insured as you get older, because the less you become self-insured when your insurance value goes down. People say, well, you pay more when you get older, but actually you pay less if you have more of your money into the policy. That makes sense?
Yes, it does. Because that's what it was for my mama. Yes.
Right. So you have more money. If your value of your insurance, let's say, if you got $250,000 of your own money in insurance and you only need $100,000, so you're only paying the premium for $100,000, not the $350,000, because you only need, the insurance company is only contracted for $100,000, even though you have $350,000, because the $250,000 is more your money. That's when you see a lot of people, and I'm quite sure our viewers have heard of infinite banking. The infinite banking comes into play when people are putting more of their own money into a policy and their premiums are less. because the insurance company has less of their have less of coverage that they need for you. So that's where the infinite banking comes in. Like I said, some clients can put $250,000 into $1 million policy, but you don't have $1 million worth of coverage. You only have a $750 worth of coverage because the
Yes.
250 belongs to you.
Oh, wow. You know what? You see the feedback. Somebody gave us a whole lot of eights. Somebody else said this is amazing
Oh, thank you,
presentation.
thank you.
We did it. We
Well,
did it.
also,
Thank
too,
God.
Tanya, I mean, I have no problem working, getting my number out. So if anybody want to, you want to get started, you see the value in information, give me a call. I'm in business of working with people who trust me, number one, and wants to, help themselves and help their family. So you want to get started right away. You want me to run some numbers personally for you. You can give me a call at 912-631-6051.
Okay, I'm going to ask you the number again. 912-631-6051.
Yes.
And I'm going to say call Vivian.
Yep.
And I'm going to put that in the chat so that we'll be able to have that.
Yep.
Okay, so that's the number right there.
Yeah.
912-631-6051. Vivian, you really, I'm telling you, I don't know who this is. It's a Facebook user. They said they've worked to avoid insurance sales people because of poor presentation and trust issues. But this was awesome. Thank you. And
Thank
both
you.
to both of us. Yeah, so thank you. See, Vivian, we did it. I am so happy that we went ahead and we did this.
Facebook user, I don't consider myself to be a salesperson. I consider myself to be an educator. And when I say educate, I just want to educate people, and people have to make their own decisions if it's something that they see value in for themselves and for their family. So thank you. I appreciate it. I'm glad that you saw some value and in this presentation, in this talk today. So thank you.
We did it. So thank you so much, Vivian, for being a part of the Mucho Dinero show. Today we learned about IULs. We learned about index annuities. We were shown the exact numbers. You know what? We've had such an awesome time. Vivian, thank you so much for you. Tell us where we can find you, and also tell us about your podcast.
Okay. Well, you can find me on all social media platforms. IG, under Financial Bacon Bits. And someone asked me the other day, why Financial Bacon Bits? Why that I guess code, or the reason why, because I number one, my last name is Bacon. Number one, and number two, my podcast is about giving little bits and pieces of financial information, just like the little bacon bits you may buy at the store. So a little droplet here and there, people can become more knowledgeable about financial literacy just by giving it out to them, just a little bits at a time. I'm on Facebook as Empowering Your Financial Future, Empowerment by Vivian, Financial Bacon Bits, on Facebook. I tried TikTok. I don't remember what my TikTok handle is, but I'm in there somewhere. So if you can find me on TikTok, I've done some little things with TikTok, trying to incorporate it, my personality and life insurance and financial literacy. So I'm trying that out. And the podcast, just like Mucho Dinero, is also on StreamYard. Financial Bacon Bits, just giving people just little bits and pieces of financial information to help them be more knowledgeable and educated about money. It's not just about life insurance, but it's about money in general, and helping people, change their financial paradigms, those things that we were taught when we was younger when it comes to money. For me, I don't know about anybody else. Everything I was taught and told about money was a lie. So now I'm learning and have learned that it's more to, paying bills and going to work. It's about building generational wealth and taking care of those people that are going to be left behind when I'm no longer here.
Amen. I agree with you on that. My desire is that my great grands will say, Boss Nana,
yes,
left this for me, Boss
yes.
Nana, that they'll be able to look at these videos and say, oh, that's when Boss Nana started doing this,
Yeah.
For me, I want to be able to, like, that they will know me, because I know that when I think of my great grandmother and my grandmothers, I think of the legacy that they left here for us, and I build upon that legacy. So I just want to keep it going. So Facebook community, YouTube, we're everywhere. I put this on everything, even on the Roku channel, what have you. Wherever you are, wherever you are, just go ahead, take your time, take a deep breath, and say, you know what, I can do this. And I'm going to do this $5 at a time, $25 at a time, $1,000 at a time. It does not matter how much it is, just do it. And if you have any questions about financial literacy, I second this. And I'm pretty sure with the other people, because everybody's already said this has been a great presentation. Contact Vivian, get your affairs in order, and do not wait, because time waits for no one.
Right.
And just go with God and have God's speed. So thank you so much, Vivian, for being a part of the podcast.
Well, Tonya, Dr. T, we forgot about you. I would not be here if it wasn't for you and your personality. We met online back in 2020, and you have been there for me as a friend and a confidant and just helped me along the way. So I just want to tell you thank you. And you guys can reach her. If you need to know, you need to get your business started, you need an LLC, you need business grants. You need to get in contact with Dr. T. She has all the tea. You got to get in contact with her because she can help you get started. And she has a lot of connections that if she can't help you, she has knows people that can help you get started, whatever you need to do. So you guys, you see her IG handle up there, only Dr. T, Tonya Tab, Tonya B. That's what it says.
Tonya B.
Yep. Only Dr. Tonya B. Reach out to her. You want to be a guest, you have some information, or you have a business, reach out to her, get on her podcast, spread the word. It's about empower.
Yes.
What you said, empower,
educate,
and promote.
Yes.
That's what her podcast is about. You can get on here and spread the word about what you do and how you help people, because it's about the mission of just letting everybody know what's going on with you and getting the word out. So just want to say thank you, Dr. T. You are definitely an inspiration.
Thank you so much. So what I'm going to do right now, Vivian, is I'm going to talk a little bit about the vision board party that's coming on November 17th. And let me see if I can find my little banner for it again. Yeah, there it is. All right. All right, this is the end of the Mucho Dinero show. I want to say a special thank you to Vivian Bacon, a financial expert. I call her a financial expert when it comes down to the insurance arena. Contact her, go back, listen to this again, write down whatever you've learned from this entire production today. I thank you for listening. God bless you, and I'll see you at the vision board party. Come on in. Yeah, you can go ahead and say bye.